Mark, Dan, Steph, and Malcolm, as I said, are with me. Mr. Mahaney, welcome. You
Good to be
here. It here in person all that often, so I'm going to begin with you. Because I feel like Meta, this is really the moment. Certainly after what happened after last quarter in the stock slide. 110 billion capex guide. If that is the number, what happens to the number that investors care about most, the stock price?
I think the capex number is going to be greater than that. I think they're also going to give you total expense guidance for the full year. The Street's got about 150 billion in their models. I think it's going to be greater than that. Then the question is going to be, do they have enough revenue upside to offset that's what's going to be a little bit of a disappointment? So they're going to have to print something like 22%, maybe 23% revenue growth. And if they guide for that for the full year, I think the stock kind of holds. We're at 22, 23 times earnings. I think we're range bound 20 to 25, the PE multiple. That's what I think that's the range. And I don't really see a big move in the stock one way or the other. If I had to guess, my guess is it goes up modestly.
Why do you think the stock reacted the way that it did? As we show you on the screen, you could see the big drop off after last quarter's numbers hit. What was the major issue? And it doesn't sound like if investors were overly worried about Zuckerberg spending that they're going to be relieved of that anytime soon.
I don't think they will be, but we already had that surprise last quarter, and we're down at a lower 20s multiple. So I think some of this expense fear is already de-risked into the stock. Doesn't mean the stock trades up, but what you need to then do is you need your big two catalyst. You need to be able to talk about moderating expense growth. I don't think we get that kind of language from the company until 6 months from now, 9 months from now. And then you need a product cycle. So you're spending all this money. What are we getting for it as investors? And I think we're going to get that product cycle later this year. I don't know whether it's a frontier model. I don't know whether it's taking that Meta AI app and making it a lot more engaging or addictive or attractive. But I think it's one of those things that's going to break through for the stock.
Dan, you cover as well. You agree with what Mark said?
Look, I agree. I mean, 100%. Obviously, he always has great thoughts. Mahaney. I think my view is that this is really going to be, from a digital advertising perspective, it's our view, AI is going to be a huge tailwind for the Meta model over the coming years. The last thing we want to see them do is pull back spending. And I get the reaction that we saw in terms of last quarter, but I think they're on the offensive mode. I mean, you see Zuckerberg, wartime CEO right now, and I think this stock, and I'd say, in our opinion, there's others like Microsoft, not reflecting when we see the monetization of AI.
Okay, so the monetization, right? We know that all these companies are gonna spend. Why is the monetization of this particular name questioned perhaps more than some others?
I think because when it comes to digital advertising, when it comes to all the spending, investors are trying to understand what's the path. When does the growth rate accelerate 500,000 bips? When do you see that inflection?
When do they?
And look, and I believe over the next 12 to 18 months, that's where it inflects. But I think it all starts to inflect. This is not just for Meta, but for Microsoft, and I think really across big tech. The next few quarters, you see monetization. And that's the prove me moment right now for Microsoft. That stock is obviously traded, very, very
like
poorly.
Sideways. It's up 7%, I think, or about there over the last year. Yeah, there it is, 7.5. You can, almost draw a straight line, as you can with some of these other names, too. Let me ask you, Steph, as we fixate on Meta for a moment, because it does seem to be the one that's brought the most trepidation for investors. The stock activity doesn't lie. What do you make of what these gentlemen up here said, and what are you worried about?
Well, I agree with actually both of them. I, by the way, have no problems with their growth rate. I think total revenues are going to come in anywhere from 23 to 25. In terms of revs, on earnings, I think you're going to see 20%. That's not my worry point. The growth is not my worry point. The worry point is the spend, but I agree with Dan very much. The last thing I want to see them do is pull back. It's an expectations game. So that's the only concern that I have. Now, the buy side for OPEX is 155 to 160 billion, right? That's a lot higher than what the sell side is at. And of course, the CapEx numbers are also quite high at 115 to 125 billion. That's the buy side. So there's a little bit of a disconnect. So that's where I think there's going to be a little angst. But I do think it's also going to be interesting to hear about Reality Labs. And do we get the 30% cuts there? Because that's a $5 billion savings. At least that shows you that they're prudent on that piece of it. And then also, what about the Llama, the new model in Llama? And can that actually lead to and unlock new engagement and new budgets? And that's the big question mark, too. So I think I'm waiting to hear a lot about that as well. So, the growth story is still there, Scott. Absolutely.
Well,
it's just trying to get the operating leverage, which we haven't gotten.
This is interesting, Mark, because it sounds like what Steph is worried about is almost reversed. Steph's worried about the spend, not the growth. You're not so much worried about the spend, you're worried about the growth rate being large enough to justify what the spend is. And the time frame of when they can achieve that growth to offset the tremendous spend is the great unknown.
Here are the two really key points of context here. This company's been aggressively investing in AI for the last 3 years. They rebuilt their ad tech stack. They have the fastest advertising growth model at scale of anybody. Why? Because they've successfully used AI to improve engagement amongst users and improve return on ad spend amongst advertisers. And this company, when pressed, has shown cost discipline. That's what Zuckerberg did 3 years ago. He does listen to the stock price. He does listen to the big investors. He
does. Well, it took the Brad Gerstner letter to help them get religion on spending. Are we going to approach another moment where some big investors got to write a letter saying, what are you guys doing?
Possibly, but I don't think so. And I really love Stephanie's point, because I think the cost outlook has been de-risked. When you hear the buy side is ahead of the sell side, that tells you that something is de-risked. I think that's the case here. Yeah. They spent 2 quarters warning people, hey, we're gonna ramp up expenses in 26. People finally got the memo, and now we need to return. So keep that ad revenue up above 20%, and show us the product, show us what we're getting for that AI money. And I think we're going to see it before the end of the year.
Okay, so from Meta to Malcolm, Microsoft, because it's a stock that's done, as Dan Ives said, and the chart doesn't lie, hasn't done much. I know there's concern that AI is killing software. If any of these software companies seem to be able to fend that off, it would be this one, for obvious reasons and the partnerships in which they have. What's your outlook?
Yeah, I heard Steve Kovacs say 2 things earlier that I want to highlight for the viewers as it relates to Microsoft. One of them was as it relates to OpenAI, because this is the first time that we will hear earnings from them that include guidance separate and apart now that they've restructured that relationship with OpenAI. They both mutually agreed to see other people, so to speak. And so immediately after, in November, Microsoft announced that they had received $30 billion worth of commitments of spending from Anthropic, OpenAI's direct competitor. They also agreed to invest $5 billion into Anthropic. And so those are the sorts of things that I think will help to tell a bigger, broader story for Microsoft. A lot of the concern around this one happened to be, in that October sell-off, happened to be related to OpenAI and questions about their ability to make good on their commitments. Separately from that, I think that a lot of the questions about this name disappear if Microsoft is able to report Azure growth that's 40% or more year over year. All of a sudden, the questions over enterprise adoption of Copilot and everything else go out the window, and we recognize that right now the company is clearly focused on cloud credits and renting out cloud space, and that is good business with great margins for this business, even if the margins are a little bit thinner because they're having to make those investments into the data centers to build out additional compute for new customers.
All right, 2 minutes to go in the show. I mean, Julie, I think, said 39 billion was the number for Azure. Malcolm wants to see at least 40. What do you make of the points that he suggests?
I think, look, great points, Malcolm. Look, 39 to 40, that sort of number. Look, the biggest issue here is the view like that Google, Amazon, other hyperscalers, Microsoft, this is for Nadella to basically show, look, growth's going to accelerate. We're not backing down. And don't just put us in that camp that the best days in the rearview mirror.
You don't believe in any way they are. It feels like, since you mentioned, Nadella, I mean, you mentioned, I could mention what's happening with Alphabet. They feel like they've stolen some of the thunder from a lot of these other names. Is that true?
I think 100% true. I mean, you go back a year ago, right? I mean, Alphabet, no one wanted to touch it. Now, massive demand that you're seeing on cloud, both in the consumer as well as in the enterprise, what Kurian's done. But that's why Microsoft recognizes, like, this is a huge moment for them. It's a huge moment for big tech in terms of where you've seen some white knuckles on this big tech trend.
Last in quick, Tesla. The Wall Street Journal suggesting the other day Musk leaning back into politics, exactly the place that you don't want him to go. What do you mean?
I mean, look, it's a balancing act. You don't want to see him dive into the deep end of the pool. You need to see him in the good part, on a positive with Trump giving autonomous. But no doubt, you need him focused on Tesla. This is the big earnings call.
All right.